I mean, so for me personally, what's interesting about this rate conversation is I do think that the rates going up, I think it has helped balance out the market a little bit. Like, I feel like sellers used to be able to say, hey, your home is worth 480 to 510. And then the seller says, great, put it on for 550. And we do. And then it sells. And you're like, whoa, that was weird, right?
Yeah.
And recently with the rates going up, I feel like if you do that in today's market, you sit on the market. You know, you're on the market for 14 and then 20 days and then 30 days. And it's been interesting to watch because I feel like the rates going up has affected the buyer's buying power.
Yeah, you trigger a good point because think about this. If you are pre-qualified, let's say you're pre-qualified for 550.
Yeah.
You can buy that home for 550.
Right.
But you want it for 480 because that's or 500 because that's the asking price, right?
Right.
Well, the difference between 500 and 550 at a 2.5% to 3% interest rate was not significant enough for someone to say no to a house.
Right.
But when you go up 50,000 in your loan amount at 5%,
sure,
that's a little bit more impactful. And so I think buyers are going to have to walk away from homes that they really want because it just no longer fits their budget. Where before, when the rates were much lower, they could justify that little 30, 40, 50 grand extra.
Because it was cheap, right?
Oh, yeah.
I mean, it's cheap money.
It just doesn't impact their payment as much.
Not near as much.
Yeah.
And so now I feel like that interest rate going up has been enough that buyers are thinking twice. And because of that, as sellers got to be a little bit more honest with the market. You know, if the market value is between 480 to 510 and you list at 550, they're not getting away with it when they used to. A year ago, they used to.
Was there a time where you would just let the market dictate that?
100%.
Like you would do your market analysis and you say, this is what's the comparable support.
Yeah.
And then let's let the market decide ultimately what you sell this for.
For sure.
And as competition came, you saw the little bit of auction action going on, and
for sure,
and it would bid things up, and maybe that piece of it slows down a little bit.
Yeah, and you know what's funny? You know, even in today's market, I would tell you that we're still seeing the multiple offers. If it's priced, you know, if I give you the scenario at 480 to 510, if you list it at 500, you're getting multiple offers. If you list at 520, it's like you're scraping by, and you might get an offer at 520. But it's not like it used to be.
Do you accomplish the same thing? I mean, if you start at 510, can you get to 520?
I don't. I mean,
because there's a multiple offer situation.
I think you're better off hitting 500.
Yeah.
If your house is supposed to sell for 520, let the market tell you
it will.
Let the buyers and the energy of the home get it to where it should be, right? And I'm not saying leave a bunch of money on the table. I'm saying, hey, your comp support 480 to 510.
Yeah.
You go at 500, you're still within the realm of where it should be. And if it's supposed to be 520, let the buyers tell you that.
Yeah.
Because they love the home, and it's way funner to sell houses that way.
And from a lending standpoint for us, you know, when we ultimately have to do a loan on that house, let's say it finally does get accepted at the higher price.
Yeah.
Now we got appraisals that we got to worry about.
Yeah.
And so, you know, with interest rates rising and budgets being a little bit crimped, you know, we don't have as much flexibility with, you know, appraisals coming in under value and like we used to. So,
sure.
You know, we got to be cognizant of that.
Yeah. It's interesting. You bring a good point about the appraisals. I'm curious, have you been seeing a lot of appraisals not come in at value?
You know, there have not been near as many as I thought there would be.
Okay.
And the ones that do, the agents are pretty understanding as to why. They kind of were expecting that. And if they weren't expecting it, then usually we have some ammo that we can go back to the appraiser and hopefully get that adjusted. But yeah, I mean, if I were to give it a percentage over the last 2 years, it would be in the single digits of how many appraisals came under value, which I was really surprised with.
We feel the same way on the real estate side. We feel like most things will appraise. I mean, there's a few that we know that we just kind of threw up and it's way above what market value should be, whether the seller got lucky or what, you know, but like most of the time we can get property to appraise, you know, and there's been enough cash offers that have been substantially high that it's kind of carried our values, right?
Yeah.
And so our appraisals haven't been too big of an issue.
Yeah. And I think if somebody knows that they're maybe paying a little bit more than the market will support, they got to be prepared for that. You're not going to sell that to a 100% financing borrower, a borrower that only has the minimum, 3% down. It's going to be probably being sold to somebody that has a significant down payment or cash.
Sure.
to help support that. So
yeah, no, that's good content. Yeah, thanks for sharing.